and welcome to GST Basics. My name is Karen Noblick and I am the owner of Cougar Ridge Bookkeeping Services here in Rocky Mountain House. I am a member of the Canadian Bookkeepers Association and I'm also a Simply Accounting Premier Advisor, which is now known as Sage 50. So that's just a little bit about me. Our office provides a bunch of services to all kinds of small businesses, whether that be sole proprietors, partnerships, corporations, in a whole variety of industries, from retail to oil field to dental offices to restaurants. So we have quite an array of clients. What we do is help the business owners that have either maybe finding enough time to get their bookkeeping done, maybe they aren't really sure how to keep accurate records, and we're able to help those business owners then focus on what they really love to do. And that really is the reason why you're in business, or why any business owner is in business, isn't it? So if we focus on their finances, they can focus on accurate record keeping and other important areas such as sales or maybe family time or whatever it is that they like to do. So that's what we do for our clients. This particular webinar is about GST. So what we're going to cover today is, what is GST exactly? Where is it used? And do you need a business number or a GST number? If you do, how and where do you register for that number? What are your reporting periods and their due dates? We'll talk a little bit about the penalties that can be incurred by a Canadian Revenue Agency if you file late or if you pay late. We'll talk about how to calculate the net GST that you owe the government, how to file a return, and a little bit about payments and interest. So first off, what is GST? Well, the goods and services tax is a multi-level value added tax that was introduced in 1991 by the then Prime Minister Brian Mulroney. When he introduced it, it started out as 7% tax. In 2006, it was reduced to 6% tax midway through the year. And then effective January 1st of 2008, it was reduced again to 5%, which is what it is currently. So what is taxable by GST? That's the confusing part of GST for some people, is what is taxable and what isn't. It can't be as simple as taxing everything across the board. Of course, that wouldn't be something our government would do for us. So some of the things that are taxable you probably will find are most likely a lot of your business expenses. For example, sale or rent of commercial property is taxable. Sale or the lease of new vehicles. Vehicle repair, any maintenance that you do on your vehicle. Some food, such as fast food, candy, junk food, soft drinks, that type of food is taxable. Clothing and footwear, things like advertising costs for your business will include GST. Legal and accounting services will have GST added to them. Fuel for your vehicles, hotel accommodation when you travel, and many, many more. Some of the non-taxable items that you may come across in your business is basic groceries. So for example, if you're a caterer, most of the groceries you buy will not have GST included. Often agricultural products such as grain, wool, livestock, and those types of things do not have tax. Most farming things do not require GST. Prescription drugs, certain medical devices such as dentures and hearing aids, the sale or the rent of a residential residence does not have GST added to it. Childcare services, dental services, health, other medical, and most education services. Now these are both just lists, partial lists, not complete lists. I recommend that if you want to see more of a complete list, that you go to the Canada Revenue website. So go to cra.gc.ca, I believe, and you'll be able to search GST, and there will be a more inclusive list of both taxable and non-taxable items. So one of the big questions we get from our clients is, do I even need a GST number? Now you're required by the government to have that number if you provide taxable supplies or services in Canada, and if you have a total gross revenue before your expenses, so gross, meaning before your expenses, of $30,000 or more. And that $30,000 is either in the last calendar quarter or over 4 consecutive calendar quarters. So a quarter being 3 months. If you made $30,000 or more in sales in the last 3 months, then you will definitely need a GST number. But even if you made through $30,000 in 4 consecutive quarters, so that's not necessarily in 1 year. Your last 4 quarters might be the first 2 quarters of this year and the last 2 quarters of the previous year. If you made $30,000 in those 4 quarters, you will need a GST number. And so if you're a business that's just starting out, you may think, well, I'm not going to get to that $30,000 mark this year, or maybe not even next year, so I don't really need one. However, it's inevitable that you will need it down the road. At least I'm sure that's what your goal is to have sales of that size. So we recommend that you apply for your GST number right from the start. It's voluntary at that point, but it really is something that we recommend you do from the beginning. It's much easier to get one and start using it right from day one than to have to be forced into it partway through a year and trying to sort out when the GST number actually takes effect. The other good thing about getting a GST number right from the beginning of your business is that you can claim all the GST on your startup costs. So even when your sales are low, you'll have high costs with getting maybe your office set up and purchasing equipment and paying for advertising and hiring employees and all of those costs. Some of them will have GST and you'll be able to claim that back. So if you don't have that number, then you've kind of paid that GST in with no way of ever seeing any kind of a refund for you. So if you choose to go ahead and get that GST number, you can always give our office a call and we'll be able to help you there. Or you can go online for yourself to the CRA's business registration online, and there's the address there for you on the screen. It's a fairly simple questionnaire where you will have to answer a few questions about what type of business you do, what you expect your business to make in gross revenue in the next year. There'll be lists of, so who is the business owner, what is your social insurance number, your address, that sort of thing. But it's a fairly easy form to fill out, submit it online, and you will receive your business number or your GST number right away. You can also call Canadian Revenue Agency, or CRA, by calling the business inquiries line there on your screen. Or you can print off Form RC1 from the CRA website and mail that in to the Winnipeg Tax Center. That is our closest tax center, and you can mail it to the address that's on the screen. The quickest way is to phone in or to do it online, and then you'll have your number immediately. So your GST number is actually an extension of your business number. So if you have already got a business number with CRA, your GST number will be that same number with the letters RT and then the number 0001 at the end. So if you have registered with Canada Revenue Agency and have received a business number, maybe for corporate tax or for payroll purposes, you'll simply need to give them a call, give them that business number, and tell them you'd like to activate your GST account. So when you are assigned a GST number, they will also assign you a reporting period. So typically, if you have $1.5 million or less in annual taxable revenue, CRA will automatically assign you a yearly reporting period, meaning that you only have to file a return once a year. You only have to record and file the amount of sales and the GST you collected and the GST you paid out for an entire year of business. That's probably the situation that most of you are in, is $1.5 million or less. And although the annual might seem like it's something that would be good for you as a business owner to continue to just file your GST annually, because you only have to do it once and you don't have to worry about remembering to do it, we still recommend that you ask CRA to have you on a quarterly period. And if you ask them, they will set that up for you with no trouble. You can go monthly or quarterly. Monthly is a little bit cumbersome. However, quarterly is what we recommend for a couple of reasons. The first being that it helps you keep on track with your bookkeeping. Knowing that every 3 months your GST return is due will keep you on track as getting your bookkeeping done on a more regular basis. Also, if there is GST owing, then you're paying a little bit every 3 months instead of at the end of the year finding out you owe thousands of dollars in GST and you have to pay that in one lump sum. So if you're calling into CRA to get that GST number, we recommend that you ask to be put on a quarterly schedule rather than an annual one. If you have more than $1.5 million but less than 6, you'll automatically be put to quarterly, and you could ask for monthly. If you're really great at your business and you're making more than $6 million a year, you will have to do monthly remittances. So there are a number of important due dates then once you get that number and once you're assigned a reporting period. If your reporting period is monthly, then every month you need to file a GST return, and it's due by the end of the following month. If your reporting period is quarterly, which is the typical, then you have until 1 month after the end of that fiscal quarter. So if you have been assigned the quarter of January through March, so January 1st to March 31st, you have until 1 month after April 30th in order to remit and to file, and to remit. It's important at this point to know the difference between the word file and remit. File means you're just reporting. So when you file your GST return, which can be done online or through the mail, but most typically now online, you're simply reporting the amount of GST that you collected from your customers and the amount of GST that you paid out. So that's filing, that's reporting. Remitting means paying. So if you owe money to the government for your GST, you must remit that as well by the end of the following month. If you decide to stay as an annual filer, then you have 3 months after the end of your fiscal year in which you must file, so report, and remit, pay. So you've got 3 months. So if you go from January 1st to December 31st, you've got until March 31st to file and pay for your GST. If you are an annual reporter because you are a sole proprietor, meaning that you are filing your income tax on your own income tax return rather than through a corporation, then you must file your return by June 15th. But if there's any money owing, it's due by April 30th. So therefore, it makes more sense just to go ahead and file your return before the end of March. And then if you owe any money, you've got to the end of April to pay it with no penalties or interest. If you are an annual filer, you may need to remit quarterly, even if you don't have to report quarterly. And we're going to talk about that a little bit down on the slides here soon. So if you are an annual filer, so that means once a year you report to the government how much you collected and how much you paid in GST. And you find that at the end of that year when you file it, you owe $3,000 or more in GST for that year. Then in the following year, CRA will require you to pay installments. And they calculate your installments by the net tax from your previous year and divide that by 4. Or you can estimate what you think your GST will be for the year and divide that by 4. And you will need to remit that, so pay that amount each quarter, even though you're not reporting or filing the actual GST return for a whole year. If your GST net tax was $3,000 or more, CRA will automatically then switch you to a quarterly remitter, meaning that you will have to pay every quarter. So it's not something you have to sign up for or anything you need to do. They will automatically do that for you. So here's an example of why we quite often recommend that annual filers call into CRA and ask to be changed to quarterly. If you are a quarterly filer, that means that every 3 months you're going to file your GST return. You're going to report what your sales were. You will report how much GST you collected on those sales. You'll report how much GST you paid out to your vendors, and you will pay the net tax. So let's have a look at the first square there, the first chart. In quarter one, you did your return, you filled it all out, and you discovered that you had a net tax of $800 owing to the government, so you paid that $800. Quarter two, maybe your sales were down, or maybe your expenses were way up, and you did your GST return to discover that you only owed $200, so you paid your $200. Then in quarter three and quarter four, you had a $400 amount owing and then a $600 amount owing. So for the year, you paid $2,000, but it didn't have to be in one lump sum. It was broken down 4 times over the year. It was a little bit more manageable to handle. In the second example, this is an annual filer. So this is a business who only once a year files their return, reports how much they collected in sales, reports how much they had to pay. So they only do that once a year, but because they were an annual filer the previous year, they were forced to make installment payments. So they had to make an average of what their installment payments were the year before. So if the year before they owed $3,000 in GST and they were forced to become an installment payer or remitter, they would have had to pay $750 every quarter, regardless of how much they took in, regardless of how much their sales were, regardless of anything else. They would be having to pay $750 every quarter. So when you have a look at those two, if you were to file quarterly exactly what the numbers are, you only would have paid out $2,000. But because you stayed on as an annual filer in the previous year, in the second example, you actually paid out $3,000. Now, at the end of the year, when you file your return and you filed that you only owed $2,000, but your installments had added up to $3,000, you will get that refund back for sure. But wouldn't it have been easier throughout the year to have made quarterly installments of exactly what you owe, so that in some of those quarters you're not paying out as much? The penalties for late filing. So let's trust our government that we're going to get penalized for everything that we do late, right? And those penalties can add up very quickly if you are late with filing and or remitting. So if you're late reporting and or if you're late paying the GST payable. The way CRA calculates the failure to file penalty is they take 1% times the overdue amount plus 1/4 of the amount that was calculated in the first portion in A times the number of complete months your return is overdue to a maximum of 12 months. So here's an example for you. If your overdue amount is $1,000, so you owe $1,000 in GST and now you're late. The number of complete months overdue is just 1 month. So you were supposed to have paid it by August 31st. You didn't get it to CRA until October 22nd. So it was due August 31st. 1 full month is September 30th. October 22nd doesn't quite take you to the second full month. So therefore, CRA is only going to charge you for the 1 full month that it's been late. So here's the calculation. 1% of the amount overdue. So you're overdue $1,000 times 1%, so that's $10. Then they take 1/4 of that $10 and they multiply it by the number of months that you're late. So 1/4 of the $10 is $2.50 times 1 month, so $2.50. Therefore, your total penalty for being 1 month late on your GST is $12.50. Now that doesn't seem like a whole bunch, but for every month that it's late, you're going to be adding to that extra charge that they're adding to the 1% that's overdue. And it can very, very quickly add up. The other thing that penalties do is that it starts to red flag at Canada Revenue Agency. So if you are late once or twice or every so often, every few years or every few months, you're late by a little bit, you'll be charged the interest, but CRA will basically let you carry on business as usual. However, if it becomes a habit, they will increase the amount of percent that they use in the filing penalty. They may freeze bank accounts. They've got all kinds of different courses of actions they can take. So you really don't want to do anything that's going to red flag the government just because you haven't got your GST in on time. So let's calculate your net GST. To do that and to do a GST return for each reporting period. So we're going to assume for this reporting period that you file quarterly. And then we're going to do the first quarter of January 1st to March 31st. Now, if you're on quarterly, it doesn't necessarily follow that you will be the same as the calendar, January to March, April to June. That may depend on what your year-end date is for your business. For example, my year-end date is November 30th. So my GST quarters are a little bit off from the normal. My first quarter is actually December through February 28th. So we're just going to assume here that January 1st to March 31st is your quarter. And so on line 105, you are going to report the GST collected or collectible on your taxable sales and services during that reporting period. So I believe it's line 102. It's not here on the slide, but I believe that it's line 102 where you will report your total sales, and that is the total sales before GST. Okay, then on line 105, you're going to report the amount of GST that you collected on those sales. Line 108 is where you total up all of the GST that you paid in that quarter. So if you've got your bookkeeping up to date, you'll know exactly how much GST you paid on all of your expenses, and you'll record it there on line 108. And that's for your input tax credits, or sometimes called ITCs. Line 110 is where you may record where you have perhaps made some installments. So if you've been required to make installments throughout the year, line 110 is where you will put those total installments that's been made so far. If you haven't had to make installments throughout the year, line 110 will stay at 0. Line 114 or 115 will be the difference between all of those amounts. So if you take line 105, subtract line 108, and subtract line 110, if it's a positive amount, then that is the amount of tax that you still owe. If it's a negative amount, that is the amount that you will receive as a refund. So once you've got all your numbers in place, you've calculated whether you owe or whether you're going to receive a refund, now you need to file that return. Remember, file is report. So you can go to the CRA website and click on the link for GST net file. Most GST registrants are required now to file those returns electronically. It used to be that we would get worksheets, fill them out, you could mail them in with your check if you wanted. More and more, though, they are requesting that you do it online. If you've been sent a form with an access code, so it's just on the front page of a letter, you'll see a little square box that says GST access code. If you have received that, then you must file your GST online. And you would go to GST net file, you'd be asked to put in your access code, which will tell CRA that you are who you say you are. If you've been asked to file electronically and you don't, you just go ahead and send it in through the mail, you could get a fine of $100 for the first offense and $250 for every time that you do it again after that. So I would really recommend that you get comfortable using the GST net file option. It'll help with faster processing, faster refunds, and it gives you immediate confirmation that your return was received. Your access code will be mailed to you at the beginning of each fiscal year. It used to be that you would receive that code at the end of every quarter. They would send you the code for the next quarter. That was great because it was a good reminder for business owners that their GST was coming up and that it needed to be done, but they've stopped doing that. So now once a year at the beginning of your fiscal year, you will receive a letter from CRA with your access code for the year. It will provide you a list of all of the GST returns and the quarters in which you must file. And it will give you all of the payment stubs that you will need to pay those amounts at the bank. And that comes to you just once a year now. So when you receive that at the beginning of your fiscal year, we strongly encourage you to put that somewhere in safekeeping. We have many clients who come to us asking if we happen to have extra forms or how do we get the access code or what do we do now because we got that page and now we've lost it. So make sure that that's put in a very easily accessible place. If you do happen to lose your access code, you can call the number there on your screen, or you can go to the CRA website and you'll find a link there under the GST where you can access, or I think it's access your access code or find a new access code or something like that. And they'll ask you a few questions so that you can verify who you are, and they'll provide you with a new access code. So once you filed your GST and you determined that you actually do owe the government some of your GST back, then at your financial institution, you can use the form that you receive in that mail, in that letter that you got in the mail. It's called the RC 158, and that came with your access code letter. Or perhaps you can set that up through your internet banking with your bank. So that will be something you'll need to go into the bank and discuss with your teller or banker there. It's not as simple as just adding the Receiver General or Canada Revenue Agency as a payee. You must set it up correctly through your bank in order for those payments to be sent to the right business account. So you'll want to do that ahead of time. It may take a little bit of time for that to happen, so you don't want to go in on the day that your GST is owing to get that set up. Also, you can go to the CRA website and they've got an option for My Payment. So at this time, there's only certain banks that CRA can accept My Payment from, so you may want to visit their website and see if your bank is one of them. If so, it's a great way to go online, make your payment. It comes automatically out of your account, and CRA is paid instantly. You cannot send your GST payment through the mail if you've been required to file it electronically. So if you've received an access code, you cannot pay through the mail. If you are writing a check to pay it at the bank, make your checks out to the Receiver General of Canada. So the thing you want to do at all costs when you're filing GST is to avoid interest. So we've already talked about the penalties that can be added to you if you're late filing. That is simply the late filing penalty, as well as interest now that they will add. Okay, and interest is equal to the basic interest rate at the current time plus 4%. So that's going to be added to every, or charged on any overdue amounts. It's charged on the overdue balance, it's charged on late or insufficient installment payments, and any other overdue GST amount that you have to remit. So as well as the penalties for late filing, there is also interest for late payment. So the two of those are going to continue to add up very quickly for every little bit of time that you're late. And those are expenses to your company that cannot be claimed as a deduction. So you can't claim CRA interest and penalties like you can interest and bank charges. You can't use those penalties as a way to reduce the amount of net income that you have in your business. So here's an example of some interest that may be charged for those people who are annual filers but quarterly remitters. So again, that's the people who report annually and they have to send quarterly installments, and then at the end of the year they'll send in one return and determine whether they owe or not. So remember, we talked about the installment payments from the previous year and how you can take that amount and divide it by 4 to determine what your installment payment should be, or you can estimate what you think your GST will be for the year and pay it in 4 equal payments. Let's have a look here at a couple of the examples here. After you've calculated what you're going to pay, so if you've decided you're going to pay 1/4 of the net tax that you owed in the previous year, and you've paid them on time, you've paid each one in full, even if your net tax for this year is more, you will not be charged interest or penalties because you paid 1/4 of the net tax owing on each one of your installments. So they can see that you took last year's amount, you divided it by 4, you made them on time, everything's good. Now you owe this extra, you can pay that and all will be fine. If you realize at any time during the fiscal year that you paid less than your required installment, or you wrote the check for the wrong amount and you need to catch up, you can always add that to the next installment, so long as by the end of the year you've paid the proper amount. If they have to start adding interest, the installment interest is calculated beginning the day after the installment was due. So if you're late paying an installment, the very next day they start adding up that interest. The day the overdue installment amount and any accrued interest is paid, or the day that your net tax owing for the year is due. Okay. Installment interest will equal to the basic rate plus 4%. So here's an example. If your net tax for 2016, so the net amount of GST that you owe for 2016 was $4,000, and you've decided or estimated that your 2017 is only going to be $3,200 in GST. So you've decided to make the quarterly installments based on what you think your GST will be. So you're going to do a quarter of $3,200, which is $800 each period, each quarter. So that's what you did, and at the end of that year, you calculated your net tax, and actually, you were supposed to have paid $5,500. Since your 2017 installments were less than the required amount, you're going to be charged installment interest, and you will have to pay the balance of that $2,300 plus installment interest. But if at the end of 2017, your net tax really was the $3,200 that you thought it would be, and you've paid those installments, then you're good to go. If in the second example, your net tax for the 2016 year was $4,000, and you estimated that it's going to be $5,500, but you decided to make installment payments of $1,000 every quarter and base it on the amount that you actually owed on the year before. So you've made now installments of $1,000 every quarter, every 3 months. At the end of 2017, you were correct. Your net tax is actually $5,500, but because your installment payments of $1,000 were correct based on the previous year, and you paid them on time, you won't be charged installment interest in this case. So you will have to pay the difference of the $1,500, but you won't have any extra interest added to it. So it seems very confusing, I know. To me, the best and the easiest way to avoid all of this is to check with CRA, ask to be a quarterly remitter, ask to be a quarterly filer, so that you can file your GST every quarter, report the actual numbers, pay the actual amount owing each quarter, and you'll avoid all of this trying to guess what your installment payment should be. That is basically GST in a nutshell. It's really important that you go online to the CRA website, you find out for sure what sales you must charge GST on, what purchases you're able to claim the GST or ITCs back, and the form is as simple as filling out the sales, the GST you collected, less the GST you paid, and the net GST will determine whether you owe or be getting a refund. So thank you very much for the time that you spent with us today talking about GST. If you've gone through this whole webinar and you're still very confused and you really just don't want to deal with GST at all, feel free to give me a call at my office there on the screen, or send me an email. But if you felt like you got a lot of great information and you're ready to go on to the next step, please join us for other webinars such as bookkeeping basics and payroll basics as well.